Hi guys, Deanna here from More Than Mortgages with some breaking news. As I'm sure you know, lending over the past few years has been pretty tough. One of the hardest things that we've seen happen is that serviceability requirements have tightened up drastically, which basically means that a few years ago, you might have been able to afford, in the bank's eyes, a $500,000 property, and as at today, you can only afford a property that's $300,000. So borrowing capacities have been substantially reduced. So the good news is that we've learned today that APRA, which is the governing body that regulates all the banks, has recommended that the banks reduce their serviceability rate. So what I mean by serviceability rate is this is the buffer that banks apply when they are assessing whether or not you can afford a loan. So they want to make sure that if interest rates do go up, that you can still afford the repayments at the higher rate. The problem is the assessment rate is typically around 7.25 to 8%, which is almost double the actual rate that you're paying. So APRA has realised that the serviceability rate is, severely impacting people's ability to borrow, and they're basically saying it's too high. So APRA has suggested to the banks that they reduce the serviceability rate, and what this means for you is that you'll be able to borrow more. So for investors, this might mean that you have previously sort of slammed into a serviceability wall. You might be able to go and buy that extra investment property, or for homeowners that you may have come to see me and I've said, look, you can only afford, something worth $400,000. This might open up your options to be able to go and buy something for a little bit more, say $500,000. So I think this is really great news. The changes aren't going to be rolled out straight away, probably in the next month or so. They're still in discussions. So I'll keep you posted as the changes are rolled out. Until then, if you've got any questions, let me know.